Hey everybody, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx, coming to you from the live trading room on Discord, which is an amazing community of traders of all different skill levels. And I'm in there most hours of the trading day to share what I'm looking at and what I'm trading. I give you my entry price, my stop price, my target price, the reasons for the trade, and we do some trader training just about every afternoon, or every other afternoon, I should say, on the live mic. That's what we're doing today. Now, just if you want to join us, you get over to drstoxx.com. That's drstoxx.com. We've been in business every market day since October of 2002. And if you want to join the live trading room, click on the subscribe menu, scroll down to the live trading room. You can add on our brand new live options room for a discount as well if you want to join both rooms. All right, let's get started. So we're going to take a quick look here at FinViz. And this is a good one-stop shop for all things stocks. And this is what's called the heat map. Shows you all the S&P 500 stocks in their different sectors and how they're doing today. You can see it's a pretty green day, very nice green day. After a pretty bad week last week, market really came in quite strongly, about 2.5% for the S&P, over 3% for the NASDAQ last week on tariff worries. And then over the weekend, as Trump likes to do, he came out and said, "Hey, had a good talk with an EU representative. I forget her name, and decided that I'm going to postpone those what was it, 50% EU tariffs that he threatened EU with." And the market really likes that. Of course, anything that is a mitigation of tariff tariff worry is a very good thing, and the market really wants to rally, because without tariffs on the agenda, there's no recession, there's not much inflation. The Fed is at least on pause, if not ready to hit the brakes, not the brakes, the accelerator. And we're all the way through earnings, and they were okay. They were, all things considered, not too bad. So the market's in a pretty good place, economic indicators being what they are. A little bit on the mixed side, but mostly good. And the market wants to rally. It's been held back for several weeks now, really since the end of March. And here it is, the end of May. So market wants to rally. We've kind of come through some seasonal weakness as well, starting to get into the thick of the summer. June and July tend to be pretty good months. August, fairly good. And September is the weaker one, but we've got, 3 months of some good seasonal tailwinds coming at us, and market is happy today. So let's keep that up, shall we? Now you can see some weakness here in the consumer staples. Those are safe havens. Obviously, money is flowing back into growth and the riskier assets. Utilities are weak today, but again, safe haven play. We've got a few of the healthcare plans that are down today. UNH is down again, of course. And but tech, everything tech, and travel stocks are good, very good. In fact, they're really getting a lot of good coming into the seasonal trend. Right, summer, everybody's traveling, and they're anticipating that. And we've got financials, banks are doing okay. We've got software doing okay. We've got consumer cyclicals bouncing back, with Tesla leading the way higher, 6.7%. We're long Tesla in both of the rooms, so we're happy to see that. We're long Amazon in the live trading room, and we're long NVDA in both rooms. We're long AVGO in the live trading room, and other things that are going on. So we're just having a great day, really having a good day. Okay, now let's go to the homepage, and you can see that it is a trend up day. There was a little bit of a drop, about a 10-minute drop right off the opening bell. Wasn't scary, wasn't really on big volume. Nobody really got sucked into it, not like it was a bear trap, but in fact, it was a bear trap. And the market's just been pretty much all up or flat since then. It's a perfect trend up day, one of those days where you really can just kind of breathe a sigh of relief, take a deep breath, sit back, and watch your profit and loss, mostly profits, start to grow. And that's just the kind of day we have. VIX has been falling. Where is the VIX right now, by the way? Where Where do we have the VIX? The VIX is under 20. It's down to 19 and change. So that's a good sign. So the VIX, right, under 15, that's really very complacent. You get those in sort of late stage bull markets. Above 20, you start to get some volatility between 20 and 25. Pretty good trading market, short term trading, but can be a little bit tricky. Anything above 25 is the kind of thing you start to see in bear markets and panicky kind of markets. Between 15 and 20, that's your sweet spot, right? That's your sweet spot. And that's exactly where we're at, right? We're just now under 20. All right. Next thing I wanted to look at, something very interesting to show you, and that is the call flow for a particular Chinese stock that reported earnings overnight, and the market wasn't real happy with it. It was a big knockback, about 20% at one point, and it's been slowly climbing its way back up. Now, it's always a question, right? When a good stock, this is a very good stock. In fact, let me show you the Market Smith metrics on this, right? So if I pull this over, the stock is PDD Holdings. It is a like several of these big Chinese tech companies. It's kind of an online retailer slash AI slash data analysis firm, among other things. And it just got whacked on earnings. I'm not exactly sure why, but maybe the Chinese consumer is pulling back. I have no idea. You can see really deep cut off the open, right? It closed up here near 120 over last week, and it was doing okay with the market falling off, and then down near under 100, in fact, for 24% at the lowest off the open on huge volume, right? The volume's up over 500% above average. So that's a lot of panic. People are getting out. Now, when a good stock like this, and this is good, right? EPS rating of 96 out of 99. That's very good. An A plus for the group. Can't get any better than that. An A for sales, margins, and return on equity. Can't get any better than that. Accumulation distribution has been knocked way back to a C plus. Comp rating 86. That's because the relative strength rating has come way down. Timeliness rating is a C. That's not so good because of the technical damage in the chart. But look at this. The two green triangles, estimates are rising. Two blue numbers here, estimates are bigger than last year. So all good stuff. And then the question arises is that big drop on earnings, is it a buy event, right? Is this a great place to get in? We've got 20% off, 20% discount. The shares are on sale. Should we jump in? Well, one way to answer that question, it's not the only way, but it is a good way. That is to go over to Black Box Stoxx. If you're interested in a free trial, I can give you a link for that. I think it still works. It's been a while since I've given that to anybody. But here's the thing. So you type in a ticker that you're interested in. PDD is the ticker for the one we're interested in, and just see what's the option flow today like. More calls than puts. Big calls being bought. Big puts being bought. Right? Is the options market seeing today's event, big sell-off, as a buying opportunity or not? So I think it's pretty clear. Just looking at this is latest. This is on a time basis, right? So the latest trades are up here at the top, and if we scroll down, you're going to see a lot of calls being bought today. Calls all the way down. There were some puts off the open. Every now and then we get a put trade, but for the most part, it's just all calls. Now, I have my filter here set at 100,000, so we're not seeing all those smaller trades below 100,000. What if we put this up to, say, 500,000? Let's see what the real big guys are doing today with PDD. Well, still, calls. Not as many, of course, because we've just knocked out a bunch of the smaller trades. How about if we went to 1 million? What about 1 million, right? Everybody who's got enough cash on hand to buy $1 million worth of PDD options, what are they doing today? Well, again, mostly calls, right? Mostly calls. And you can see 1.35, 2.75, 2.77, 1.1, 1.6, 2.5. These are all calls. And you go over here and you say, well, how much time are they looking on this trade? How much time do they expect generate the maximum amount of profit? Are they going out just a couple of weeks? Is this just a day trade? I mean, that's certainly possible. That happens a lot, where people are just going out for a few days, especially if they have weekly options, which PDD does. And so really that's not the kind of information we're interested in. We're looking for people that want to hold on to these calls for a while. And look, November, right? December, July, okay, that's a put. So July puts. The short-term guys are thinking bearish. The longer term guys are thinking bullish. December, all the way down. Here's a July. December. That 1219 at 100 strike is the most common one above $1 million. And that typically means that's the same guy. The same guy at the same expiration, at the same strike price. Let's see if he's going with the same size. Yeah, pretty close to the same size. Maybe that's a different guy. But for the most part, the biggest interest in a very deep-pocketed trader, he's probably managing a hedge fund, is out to July, up, and he's going at 100 strikes, so that's pretty much the current price. It's 101. He's going with the at-the-money puts. So he's not thinking like a lotto, I'm going to reduce my premium, my cost expense. He's going right at the money, taking on a pretty good amount of risk, right? And so these calls are really going to have to move. The price is going to have to move well above $100 for this guy to even break even. He's paying 13.5, 13, 14, 15, 15.7. So it's got to get up there, 116, 117 by the time he gets out to December for him even to break even. And he's thinking a lot more than that. I'm sure he is. All right. So is PDD a buy? Well, according to the option flow, yeah. According to at least this big professional trader that I'm sure knows what he's doing, otherwise he wouldn't have that much money to invest. It's a good buy between now and December, and it's going to get up to at least $117 by then. All right, so that's one way you can use black box stocks, and of course you could do that for just about any. Look at this UNH. Maybe they're onto something here, because UNH is not having a very good day. It's not that it's down huge, but it isn't. It's not green today. It's red. Yeah, interesting. Let me just click on that, because we have UNH shares in our long-term portfolio of the live trading room, and we bought at around this same price, about 300 or so, and current price is 290. So we're underwater with those, but that was only the first of 3 tranches. I'm kind of waiting for things to settle out before we add on a second one, and this is encouraging. This is very encouraging. This is somebody buying deep in the money with time all the way out to January, and it looks to me like this guy 116, 270 is the same guy. Yeah, the same guy at different price points. Okay, so that's enough. Now let me go over to our charts. This is a TradingView daily chart. I've got the linear regression channel on here set at 1.5 and 2.0 standard deviation. I've got the 50-period moving average. The blue line is the 21 EMA. The green line is the 200 SMA. And volume bars down below. We've got an RSI with a 10-period smoothing factor on there. And I've got down here at the bottom cycles, a cycle indicator. They're dynamic cycles, so you're going to see long-term, intermediate term, short-term, and they'll flex a little bit as price changes over time. But typically with cycles, if you see the longer term, here the purple and the yellow and maybe the green, when they start bottoming out and rising, that's a good place to start looking at longer term trades. When they start topping out and falling like they did here, that's a time to maybe step aside. Anyway, I don't do a whole lot with cycles. This is a proprietary indicator a friend of mine has that he developed, but I'm just kind of playing around with it. Sometimes the intermediate cycles work really well. Sometimes the longer term work well. Sometimes the short term or where it's at. I haven't really figured out how to use that properly. So anyway, it makes for some nice colors at the bottom of the chart. I like that part. So let's look at the Dow. So we bought the Dow this morning in the live trading room, and it was pretty close to right after that little dip off the bell, and it's just been going up ever since. So we've got, this is last week, right? It was a 5-bar pullback for the NAS, a 4-bar pullback for the S&P. We tagged the 50-period moving average on Friday, bounced kind of nicely up. Didn't quite get back to the green, at least for the major indexes. I was kind of hoping we would, because we actually did get up into the green for a little while. Maybe it was about 1 or 2 o'clock in the afternoon, and then it just slowly started erasing that gain back down into the red by the time we got to the close. It was a little bit of a disappointing day, but the fact that we had the big flush out early, it held key support, bounced back up to close closer to the high of the day than the low of the day. All of that was bullish, and all of that set up, technically set up today's nice bounce. But we really needed a catalyst to get rid of the negative sentiment we had last week. And the negative sentiment was based on Trump coming out and saying, I'm raising tariffs on A, B, and C. So erasing that or walking it back or postponing it, kicking the can down the road a bit over the weekend really helped. That was the catalyst we needed. So a big update for the Dow, and we kind of want to see the Dow gain some strength, right? It is in a downtrend. The highs, all-time highs, are way back here in December of last year, and it's been a long time since we've been back up to that area. Typically, you get, in a bull market, in a good bull market, you get new all-time highs every 2 or 3 months, right? You get the new all-time high, you get a little bit of a consolidation. Maybe you have a couple of weeks that are weak because it's pricing in something, but then right back up to new all-time highs a few weeks later. This isn't that kind of market. It's not a bear market, although we very briefly stepped into bear market territory on an intraday basis, at least. But it is not a bear market. But it's also not. It's not a rip-roaring bull market either. I mean, I think we're still in the bull market cycle that started at the end of the COVID crash, right? We did have 2022 in between, which was a very short-term bear market, and it was not based on a recession. I'm not exactly sure what happened in 2022, what the causes were, but there were several. And the Fed raising rates, that was the main one. And so the 2022 bear market was a bear market, but it wasn't a real severe one. And then we had this flash bear market that lasted a couple of hours. But again, not a bear market. It's just a prolonged pullback or consolidation in an overall bull trend that we've been in since the bottom of COVID. That was a crash in the market, and that was based on a very short-term recession. We haven't had recession since then, so all that's good. But we want to see the Dow get back on track because it's not just a tech index, and it's not hugely diversified like the S&P 500. It is a concentrated mix of all the major sectors, and we want to see all the major sectors do well. So the Dow, having been off the all-time highs for several months now, we'd like to see it get back on track. Here's what I'm seeing in this chart. You can correct me if I'm wrong. And we've got a nice left shoulder here. Let's tighten this up. We've got a head, and we've got a nicely forming right shoulder. And as long as we don't get much deeper than the 50-period moving average in this right shoulder, I think that's probably the pattern that's forming. The next move we could imagine is a break above the neckline here. And if that comes into play, then we will have a pattern that we can target as an all-time high, about 48,000. 48,000 I think is doable. Not any time real soon, but probably by this time next year, all going okay. The tariffs having been evaporated, the Fed has cut rates a couple of times. Some of the worries in the tech stocks and the AI stocks and so on, they're starting to get back on track. We've got some new industries coming in with Optimus and self-driving and robotaxis. And that's what the market needs. It needs that kind of new excitement. And if that all happens, we'll be at 48K pretty quickly, within a year. So 6,000 is the next stop for the MES, the S&P 500. it's a similar kind of pattern, but this is more robust, right? We've got more tech concentrated at the top. That's part of it. It's a more broadly diversified portfolio. So the healthcare stocks, which have been weak, utilities, which have been weak, energy, which have been weak, really weak, aren't weighing down the Dow as much as they're weighing. They're not weighing down the S&P as much as they're weighing down the Dow. That's why we're up higher. We're much closer to all-time highs. We're above the 200 period moving average, and we just need to see things get even more robust. And then by that time, 6,000 I think is probably going to be a little bit of a lid. We'll get a double top there. People get scared about a double top. It'll probably pull back and test the top side of the 200, which would be around 5,800. And that's not going to feel real good, but I just think that's probably going to happen here soon. Then we get the move back up to 6,100, and we should be there by the end of the year. Pretty sure we'll be there by the end of the year. All things going well. Now, the even more robust, even more likely to hit new all-time highs is the Nasdaq. This is your strongest, and it should be the strongest. This is the Nasdaq 100, I should say, and it's it's all tech, and the big mag stocks, 7, 8, 9, 10 stocks that are the biggest operations on the planet are all there at the top of all there at the top of the index, and they're weighted. So that's why this one is a lot stronger. So your all-time high is a little bit higher than this late February pivot. So, but if we bring that down just a little bit and put this on a closing basis, right? On a closing basis over here and an intraday basis over here, that's your target up above 22K. We're at 21.5 now. And I don't think this is going to get stopped right here. I think the next target is going to be that, right? That black line right there. So we're not in any kind of a QQQ play in either room. I really didn't think we were going to get such a strong reversal today. Otherwise, I would have put us in that last week. I thought we were going to come back down and test at least the 21, if not the 200, on the pullback that we had last week. And we didn't because of the news, right? The catalyst. So the macro picture will always trump the technical picture, but you've got to pay attention to both. So I think we probably will get in. It's maybe not the best, it's a big green stick. I don't like to get in on big green sticks, but maybe we can nibble before the close today on some TQQQ or some MNQ. Or maybe in the other room, I might put on some QQQ calls. We'll see. Not sure yet. We'll just see how we get, what it looks like when we get closer to the close. But this is a good reversal, practically erasing 4 days of selling pressure in a single move. That's very, very bullish. So M2K, this is the Russell 2000. It has been in a downtrending, bearish kind of market for several years now, at least two. Never recovered from the 2022 bear market. Haven't hit all-time highs since shortly after COVID. So it's really not in a very good place. But if tariffs get taken off the table, if we get a repatriation of industry back into the United States, if rates can come down, lending rates can come down, consumer loans come down, business loans come down, we should see small caps catch an outsized bid. They should start to outperform, just as they're doing today. They're up 2.5%. The Nasdaq's up 2.3%. So this is good. We have a 3-bar reversal, doji, hammer, big green stick, 3-bar reversal. We just need to see some follow through tomorrow. Take a look at this. This is something that everyone should be paying attention to. This black line right there. It is a resistance line. It is a trend line. The trend is down. Obviously, it is down. The 50 is flat. The 21's rising. The 200 is still slightly downtrending, but the LRC, which is your 3-month trend, is clearly in a downtrend. However, all downtrends break to the upside when we transition from bear market to bull market, and I think that's about to happen for the small caps. So if we're not in TQQQ today, we might get into some TNA. TNA is a 3x bullish version for the small caps, or some M2K. I actually had a little bit of M2K on this morning. It's a trade I put on. I didn't even announce it in the room, but I put it on early last week, and I just kept watching it fall. And then when it got back up above my entry price today, I just got out. I just jumped out because I didn't want to take a loss. And it just has been going higher since then. So I don't mind stepping back into a trade, especially one that has some really good upside. And yeah, I think this is kind of your consolidation move, right? You call it consolidation move right in this little pocket. Volume balance has been, I would say, mixed, but leaning slightly bullish. And the RSI is strong. We're not seeing any kind of bearish divergence on the most recent pivot high at all. And so, yeah, I think it's technically it's looking pretty good, and it's got some good tailwinds coming into the summer season. So I like that. So we have Bitcoin on in our long-term portfolio in this room. We had some calls on in the other room. It was a spread. The spread was good. We profited about 25% on it when we closed it today, but it just wasn't. I didn't have the structure just right for the move that we're seeing because the top end of the spread was kind of limiting our gains on the bottom end. So I pulled that. I just put that into the bank. We also had on a little too much bullish exposure. Wanted to lighten the load and reduce risk. But I still think IBIT is your best way of hanging on to Bitcoin, and I think you're going to have a good run in Bitcoin. We definitely don't want to sell our IBIT shares in the wealth building portfolio, and in the other room, I may get us into something else that is Bitcoin related. We are in Mara, MARA, which is a Bitcoin miner in the options room, and that's just on fire today. Absolutely on fire. So we'll see where it all goes. But Bitcoin, I think, is bullish, 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 bullish. Not worried about it at all. Oil is bearish, bearish, bearish. We had on UCO. It started to get a little bit of traction on Wednesday of last week, and then it's been kind of all downhill from there. A little bit of hope yesterday, Friday, reversing that today. Everything's falling off. We kind of want to see oil fall. I don't really mind it because if our gas gets cheaper, and if energy production gets cheaper, you're going to see earnings and profit margins go up. And the gold miners are actually a good way to play the falling price of oil because oil is a big headwind for them. And gold is doing well. Now, let me take a look at gold because it's still above 3,300, which is a pretty good line in the sand to keep an eye on it making a next leg higher. It's above the 21. It's clearly in a nice uptrend. The MAs are stacked. It's been in a long-term uptrend, and it's been outperforming every asset class with the exception of Bitcoin. Bitcoin, it was outperforming Bitcoin for a long time, months and months. And now Bitcoin is starting to catch up and has surpassed gold. So gold is in this trading range, clear line down here at the bottom around 3,200, clear line up at the top here at 3,440, 3,450. And we're right in the middle of that range at 3,300. And if you're not in gold, I do have some myself from our last trade. We were in UGL. That got stopped out for a small profit, I think, or small loss because we had a profit stop on it, but it gapped down this morning. But I'm still in the MGC micro E-mini for gold, and I may call that officially because I do think if we look at the hourly chart, right, this is your hourly chart here, or 2-hour chart, I'm sorry. We've got the uptrending LRC. We've got a nice little rounded bottom reversal down here, down below the 2.0 standard deviation, and it doesn't get down there very often in an uptrend. Yeah, it's got some overhead to work through, but especially if we see that line break to the upside, you'll get a nice run up to new all-time highs in gold. We've got rates falling today, which is good. We want to see rates come down. Bonds have been doing really well, really strong today, and that's good. We want to see that. Lower yields means cash isn't going to go chasing after bonds in search of some cheap income, and instead it's got to go into stocks, the only game in town. Okay, that's all I wanted to do with the indexes. I do have a growing list of greens, what I call greens. These are setups on the bullish side of the market. Some of these are ready to go. Some of these were already in, and some of these need a little more time to confirm the setup. So let's take a look at these. Always a good idea to keep an active list of stocks that you are interested in, and even keep a list too of stocks you are already in, because it's always a good way to gauge your is your stop loss at the right place? Is it below the right moving average, below the recent pivot low? Is my target price realistic, or am I a little too hopeful? And those kinds of things you can only tell by looking at the chart. So update your opens on a regular basis by looking at a watch list of your open trades, and then keep an active list of stocks you're interested in buying. And that's what we have here. And these are for all sorts of different reasons, right? There are all kinds of different stocks in here. And that's good. You want to see a good variety. So we're already long HUT. This is a Bitcoin play, and not going to sell it unless it stops us out, because this is a very nice looking bull flag. Let me show you the lines here. Here's your rising support line. Here's your equal distant top on the resistance side. And we are banging up on the top side of that pattern. And the more you bang on the door, the more likely it is to open. And I think it's just a matter of a day or two before this breaks out to the upside and gives us a nice squeeze move like this one. The squeeze move went from 13 up to 17 and change in just a few days. And HUT has a move like that coming, I'm pretty sure. So we're right. It's right where we bought it, a little bit above where we bought it, and so it's not too late to get in on this one. Okay, so that's HUT. We're long bulls is a nice way of playing the big tech stocks at the top of the indexes. It's a 15 stock fund. The biggest tech stocks on the planet are in here. Correct me if I'm wrong. I don't think it's a weighted fund. The old FNGU, which is now FNGA, but I don't think it's even trading him. I don't know what happened to that. I really don't. Maybe the holding company went out of business. But bulls is your best way of leveraging the mags, and I'm pretty sure it's unweighted, but I could be wrong. In any case, all the mags, every single one of them, just about, with Netflix is kind of an exception, printed this beautiful, almost picture perfect bull flag. I mean, it's almost so perfect that I hate to think of it as a bull flag, because the market never gives us perfection. There's always a little bit of imperfection somewhere, but there's nothing here in this. So here's your pattern, right? You've got this is the April 7th tariff panic low with immediate reversal once Trump postponed everything for 30 or 90 days. We had the pullback in all the major stocks to retest the lows or get close to them. And then it's been in a bullish pattern ever since. That higher low right there, I've got my cursor on it, that higher low started the reversal back higher. Broke out above the most recent pivot low, little flag, break, little flag, big break, now perfectly formed flag, and I think it's just a matter of time before this breaks out to the upside and gives us a very nice run indeed. Now, we've got resistance up here at 200. It's not going to get above 200 anytime real soon, and maybe not even until the end of the year. But I could see this getting us up to 170, 175, somewhere in that area, in pretty quick order once we get on the upside of this flag and on the upside of the 200, which is right there, that green line. We're almost there today. So we're long. We're not. We have been tightening our stop. I don't really want to get stopped out, but better to do that just in case. Amazon. Here's your flag pattern. Big breakout today. Volume is a little bit light so far, so not a lot of conviction on this move. Might give us some back and fill tomorrow, but we are long Amazon through the leveraged fund. We're not in ARM. We had some calls over in the other room for a while, and I'm forgetting what happened. We just hit our new all-time high in the live options room, and as of before we took a stop out in UCO in this room, we hit our all-time high as well. So both rooms doing really well. Market is not at all-time high, but if we're at an all-time high in profit, we're doing okay. right? We're outperforming. We're printing alpha, as the big guys like to say. So here's ARM. ARM looks good, but it is well below the all-time high. So it's been kind of weak. ARM, Intel, AMD, these are the lagging guys in the semicon space. And even for a while, NVIDIA wasn't doing all that well either. So it's been a consolidating move for most of these major players. There's your support line. You don't want to see that break. It is right up against the most recent pivot high. That's what you want to see break to the upside, and it's almost there today. And I like this. I actually like this setup. We may be in ARM, some shares of ARM before the end of the trading day. Facebook looks good as well. Here's your recent bull flag. We've got a potential of a move outside. I think we're there. Yeah, we're there. Volume balance in recent trading has been good. Prior to that, it was not very good. So there was a lot of distribution in Facebook shares, and there were some concerns, not so much with tariffs, but with EU regulations and so on. I'm not exactly sure of the details, but that seems to be behind the company now. Nice looking breakout here today. Again, volume is a bit on the light side today for most issues. Not a lot of conviction yet. I think we need to see another good up day to bring in the money on the sidelines. By the way, money market funds, all-time high. Never been higher in terms of cash on the sidelines. Never been higher. That's a bearish sentiment, right? But it has bullish potential because all that money's got to go somewhere. If you're only making 5% and you're seeing your stocks go up 5% a day, you're not going to sit on the sidelines for very long. All that money will come back into stocks. TLT, I said in the room, I think we might want to get back into our TMF trade. That's usually what we use to get bonds going. I'm going to give it another day. Let's see if it can crack to the upside and hold. Bonds have been very tricky lately, right? They gap up and then they crap. They gap up and crap. They look like they're about to break resistance, and then it's right back down again. We don't want to get caught in that, but I do think that this particular test of resistance is likely to break out. Here's your whole mag group. Here's your flag. Here's your breakout today. Just looks beautiful. We're long calls in the other room. We have Oracle calls in the other room as well. It's in breakout mode today. I really like Oracle as a, it's an old school stock. I used to trade it back in the 90s, and it's having a second wind here with a new product line that it looks really exciting. So keep an eye on Oracle. We're long Tesla in both of the rooms. TSLA calls in the options room, TSLA in this room, and it is great. It's just leading all the mags higher, 7% today. Here's your little flag. Here's your big breakout move on a gap. Not looking back at all. Tesla likes to break resistance and really shoot higher, and then it does like to consolidate. So I wouldn't be too surprised. We get another leg higher maybe tomorrow, and then we get another leg of consolidation, but it's certainly worth hanging on to. We're long NVIDIA in this room. We're long NVDL calls in the other room. And here's your flag. Here's your breakout move. Again, NVIDIA, like a lot of the other semicons, are pretty far still below all-time highs, but it's certainly moving back in the right direction. CVX, keep your eye on this one as a recovery play. I know oil is falling. It looks like it's going to continue to fall, but sometimes these big oilers, because of other, sometimes the falling oil price allows them to make more money because their overhead costs are lower. And when gas is cheap, people travel more, so they sell more stuff, right? It's a scale thing. So I think CVX, even on a falling oil price, will do well, and it's down here pushing off quite nicely off support. I mentioned this in the room last week when it printed a bullish engulfing candle on good volume. Airbnb is a recovery play as well, still kind of downtrending, but it broke out on big up on earnings. No, where is earnings? Earnings is somewhere in there. The earnings were good, just not a very good reaction. That was the big China gap. Rallied up a little bit further, came back sharply last week, but you could see that some of these pullbacks and some of these gap downs were bought back into the close, and it's a nice gap and go so far today, and we've regained the 200. So I kind of like Airbnb as a more of a speculative play, but looks pretty good. Groupon, tiny little float, super tiny, like under like 30 million shares only available, with a very high percentage of those shares held short. And this is a classic squeeze move. This is not all-time high. I don't know where that is. Yeah, way back there. But it is a 52-week high today, and it's in a company that is advertising quite a lot. Am I right about that? During the NBA playoffs, am I seeing Groupon ads, or is that another? Maybe it's Uber Eats or DoorDash or one of those. Anyway, so Groupon, breakout, breakout, breakout. Not seeing the volume that you normally see in a squeeze move today, but maybe it's just getting started. I think it's just getting started. Uber, new all-time highs, all kinds of good stuff going on with this company. Pull back into the rising 21 and a reversal today. It's not real strong. It's not a big moving stock anyway, but I do think that this is going to get back into the upper 90s. BSX, perfect looking trade from one of my strong stock scanners in Market Surge. I'll show you the Market Surge if I can find my thing here. And I need to wrap this up very quickly. Market Surge, we put in BSX, and you're going to see some really strong numbers here. EPS of 96. This is in the medtech space, right? Drug making and other things. 96 SMR of an A, 98 for comp. Timeliness rating, that's your technical rating of an A. Blue numbers here. There's one green triangle. Everything looks good for BSX. And if you look carefully, I'm not exactly sure where this neckline should be, but there is a left shoulder, there's a deep head, and there's a very shallow, nicely formed right shoulder, just about ready to break the neckline. So this is an inverted head and shoulders continuation pattern, because this comes at the top of a nice looking uptrend. Look at that uptrend. Look at that beautiful uptrend. Uptrend, 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 consolidation, uptrend, 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 consolidation, and the next leg higher. I don't know where this could go, but yeah, we bought some calls this morning. AVGO, we are long AVGX in this room, and it's off of the breakout of the flag. Looks good. Lamont is a software play. It doesn't have very good fundamentals, but it used to be a real high-flying growth name. But tiny float, big short position in this stock, and it is breaking out today. That's typically where you start to see a good squeeze happen. So keep an eye on Lamont as a squeeze play. ASTS, how did this one come up? It came up on one of my scanners, and I'm not exactly sure why. It's a fun stock to trade when it gets going. Momentum stock. It hasn't been going for a while. It is, however, in a tight spot, what I call an apex setup. Consolidation, symmetrical triangle. There's no real guarantee it's going to break to the upside or the downside, but let's keep an eye on it. It's not ready to go yet, but it could be. Hood is almost up there to all-time highs, and PLTR is red today, but it was a kind of a gap and crap, I should say. The only thing I don't like about PLTR is that it did not do well on earnings, and the thing I'd like about it is that it closed that gap very quickly, just a couple of days, and it was back up into the gap. And then it hit new all-time highs last week and started to pull back. So I don't think the pullback is quite done yet, but let's keep an eye on it. We want to see this maybe tag the 21 or the midline of the 50, the midline of the LRC, and then reverse, right? So come back, pull back, pull back, pull back, then some kind of strong reversal candle, a hammer, a doji, a piercing, an engulfing. I'll take any of those on good volume, and then it should be ready to go back to the upside. So keep an eye on it. Guys, I'm going to let you go. I'm a little bit over time here. I better jump off. I will produce this video after my conference call, and then I'll put a link in both rooms. God bless everybody. See you back in the room in a little bit. Bye for now.